Kevin Horner, Senior Manager, Trading Services Education here at Charles Schwab, is taking a look. And, we started to really break down, and now we're back above 5,900. That's a key sort of psychological level. What levels are you watching on the S&P?
Yeah, 5,900 was a wonderful accomplishment so quickly after last week's concerns. Thursday night into Friday, things got talked back by the president here over the weekend any further. And we've seen a continuation of the uptrend that's been working quite nicely since that April 7 bottom. The level that we've achieved, 5,900, feels good. I'm sure bulls are out there targeting the last high we had right in that 59.50, 59.60 zone. And Nicole, if we can push through with a close over 59.60, suddenly we're staring 6,100 and all-time highs at 61.47 in the face. All of that seems to be available and on the table with today's risk on comfort suddenly again. So I encourage watchers of the market to keep their eyes to Twitter and headline risk, because that still exists. But it seems, Nicole, that if the administration wants to be having these discussions, the back and forth on tariffs, they want to be negotiating in public, and the opportunities that present themselves are downdrafts seeming to be bought up every single time, at least since early April, Nicole. So I think we got to keep our eyes on that process continuing. If we're looking for short-term support, that 57.85 and the confluence of the 20-day and the 200-day moving average for now looks like very solid support. That'll change quite nicely, though, if we can push through 59.50, and then traders can start considering raising stops up to that 59.50 area if we can start making new highs yet again.
Right, understood. What about a name like CrowdStrike? Why are you doing this one today?
Well, this one today specifically because it's breaking out. We've got new highs moving through what looks like a bit of a cup and handle formation over the last few weeks, the last 2 to 3 weeks developing the handle portion, and then today moving through 455, creating new all-time highs. Now, if you could view this in a couple of different ways. As always, that's going to be tied to time frame. Some traders are going to look at the depth that we've created over just the last 2 to 3 weeks, which is about 50 points of range, down to 405, up to 455, now through 455. That gives traders an eyeball of about 500 to 505 if they're short term. But if you're a longer term trader and you're looking at the depth of the cup as about 150 points, which would be basically the last high we made in February to the lows we made in April 7, well, then you might be targeting something closer to 600 over an extended period of time. And so bulls are feeling a little bit emboldened here. I have to caution, we've got earnings coming next week on the 3rd after market close. So there could be a bit of an opportunity for a run even in advance of earnings. But as we often say, Nicole, if that run happens before earnings, we commonly see a little bit of profit taking on earnings. So depending on how you choose to play this, you got to be considerate of that earnings coming in about a week, no matter what you do.
Yeah, and the chart, a beautiful one. People like to see it's right around those highs, as you noted. Exciting there for CrowdStrike. What about Rigetti Computing? This is a little different. The group has had some hot moments, but over, the high point was $21. It's at $14 today.
Yeah, it doesn't feel like it's playing catch up, but it really is. The whole group has been in place since early April, and the chart of this is intriguing because it seems like we tried to see this breakout this morning in advance of the open, but what happened at the open with a good high open today was just a fade all day thus far. The stock itself is up more than 100% off of the intraday lows from April 7. That was the same day the SPX made its lows, and we've also notably maintained the 10-day moving average for the majority of the last 5 weeks. There's been some intermittent one-day closes below the 10-day. That's the yellow line on this chart here. So it might be a little early to play a breakout because we haven't really seen a breakout with today's kind of fade on the intraday price action. But a breakout, a close over 14 would be very instructive for the bulls here. If you're wanting to be a little more cautious and maybe a buyer near support, that would be the ballpark around 12.15 to 12.25 quarter, which is coincident with the 10-day moving average. And of course, if you're buying it there, you're doing so because you're expecting a breakout. And if you're a more cautious trader, you might just simply allow that breakout to occur, kind of like we saw with CrowdStrike. Allow the trade to happen or allow the breakout to occur, and then give consideration to starting a new position based on possible momentum thereafter.
Yep. Kevin, you excited for this week? I mean, we still have a lot coming in.
Absolutely. On a short week, tend to see good volatility. That means options premiums are going to be a little different than what we might normally have seen. But given the nature of things, all of a sudden, once more, I think bulls are really encouraged. I think it gives us plenty to keep watching. And obviously, we've got NVIDIA tomorrow. So big day on deck,
Yeah.
to say the least.
True, true. All right. Kevin Horner, always great to see you. Senior Manager, Trading Services Education, Charles Schwab.